minutes from the close of trading here in the U.S., live from Bloomberg's world headquarters in New York, I'm Scarlet Fu.
I'm Joe Weisenthal.
And I'm Matt Miller. U.S. stocks rallying today, and the benchmark 10-year yield topped 2%, the latest twists in a U.S. presidential election that sent global markets into a tailspin overnight.
But the question is, what'd you miss?
Donald Trump, the businessman and now president-elect, tapped into a yearning for change among a significant swath of the public last night, overcoming a very troubled campaign. And the day after Trump captured the White House in an upset election win, Democrat Hillary Clinton and President Barack Obama called on the country to be open to the new leader and work with him as the nation begins a new political era. Is it time to put your money to work, or should you watch and wait? Billionaire Carl Icahn weighs in on how he celebrated the surprise election outcome.
As we head towards the market close, let's take a look at where everything's trading. We go over now to the NASDAQ. Actually, not the NASDAQ, excuse me. Abigail Doolittle has more. Abigail?
Hi there, Scarlett. Well, we certainly have a massive rally on our hands for U.S. stocks. We have the three major averages all trading sharply higher. In fact, we have the Dow, S&P 500, and NASDAQ all trading close to the all-time record highs. Probably a pretty surprising outcome to some on the Trump victory. But even more surprising, perhaps, is the sell-off in bonds. This is represented by the massive spike higher in the 10-year yield, 25 basis points in one day, the most on record. We have the 10-year yield back above 2%. And we have Edward Millis over at FBR saying that this reflects the Trump victory, creating uncertainty for Fed leadership and the accommodative path of policy, basically saying that rates could rise. Now, that's something that would clearly be good for the financials. Not surprisingly, then, we have the financials trading sharply higher. The XLF, or the Financial Spider ETF, is up more than 4%, on pace for its best day in about 5 years. Leading the charge, Navient. This is a company that has an education loan portfolio, so higher rates are clearly going to be good for that company's revenue. And we also have some of the big banks, Goldman Sachs and JP Morgan, Morgan Stanley, also trading higher. But I do love charts. Something that really stood out to me about the XLF today is a massive breakout to the upside. And we go into the Bloomberg and we take a look at BTV 4872. This was provided to us by our friend Jonathan Krinsky, the chief technical officer over at MKM Partners, and his answer on whether or not this breakout that we see all the way over to the side of the chart, whether or not it's legitimate. He believes it's legitimate. He also believes that it's likely the XLF is going to take out those 2015 highs. And on the bottom of the chart, this is the XLF to the S&P 500. It's breaking up right to a 3-year trend line, suggesting that we could see continued strength, not just in the XLF, but for the S&P overall. So some bullish stuff there in a nice chart by Jonathan Krinsky at MKM Partners.
All right. Thanks so much, Abigail Doolittle.
What'd you miss? Hillary Clinton ended her historic presidential campaign after yesterday's defeat. Earlier today, she called on her supporters to put the divisiveness of the campaign behind them and to look forward.
Donald Trump is going to be our president. We owe him an open mind and the chance to lead. Our constitutional democracy enshrines the peaceful transfer of power. And we don't just respect that, we cherish it.
So how will President-elect Donald Trump turn his promises into policy? Let's ask Alex Wayne of Bloomberg News and Kevin Cirilli of Bloomberg Politics. Kevin, start with you. You were on the trail with Trump the whole time. Where does he go next? What are his first priorities? And what do we know about how he wants to staff out his administration?
I just spoke with a senior Trump advisor who told me that later today they are going to be having that first transition meeting right now, currently at Trump Tower. Sean Spicer, the communications director for the Republican Party, as well as Reince Priebus, are there, and other top surrogates are expected to trickle in today to again get those transition talks underway. Tomorrow, Donald Trump will head to Washington, D.C., the city where he has vowed to drain the swamp, to meet with President Obama in what I'm sure will be a very interesting meeting, to say the least. And then I'm hearing that he will head to Capitol Hill to meet with Republicans in Congress to again start to put together an agenda, because quite frankly, Donald Trump in the last couple of weeks has focused so much on trying to become president and less so on that policy agenda.
What do we know about whether his agenda, Alex, matches up with Paul Ryan, the Speaker of the House's agenda? Because on many things, they don't agree. Paul Ryan is a fiscal conservative, is looking to cut government spending. What Donald Trump is proposing is anything but.
I don't even think we're 100% sure that Paul Ryan's going to be the Speaker of the House yet.
There we go.
Wow.
Paul Ryan may have to pay some sort of a political price for not wholeheartedly endorsing Trump during the election.
He made nice during his comments today.
He sure did, and that sounded to me like a guy who really wants to hang on to his job. Paul Ryan extended an olive branch. It wouldn't surprise me if Donald Trump takes it. But it's like we shouldn't assume it's a certainty that Paul Ryan is.
But it will be, Alex, it will be a Republican.
Yeah, right.
And Donald Trump isn't really a Republican in many ways. I mean, yes, I'm sure he's registered as a Republican, but he's not a fiscal conservative.
Sure, now he's the leader of the party now.
Is he going to be able to pass things with this Congress?
Yeah, I think he will. Traditionally, presidents get a lot of what they promise to do done. President Obama did. A lot of that might get reversed now, but Donald Trump will get stuff done. I don't know if he's going to get a wall on the Mexican border done, but some of his immigration policies, I think, will get done.
Kevin?
Look for the Trans-Pacific Partnership in this lame duck to be a crucial policy issue, because you've got to remember, Paul Ryan worked with President Obama on a bipartisan agreement, and there was a handful of moderate Republicans who worked with the Democrats on that. Donald Trump, Bernie Sanders, the grassroots in this country, making a populist pitch on both sides of the aisle, opposing that trade deal. A lot of folks in Washington uncertain about whether or not TPP will get passed.
Here's my big question today. So basically all the pundits got it wrong. Everyone expected Clinton to win. And every time this happens, after there's a shock election, you read these stories and the days and weeks ahead, it's like, oh, there were signs that they saw all along that worried them. And there were all these clues that it was going to go it this way. And people reconstruct a narrative as if it was totally obvious. So what are those signs that everyone missed along the way that supposedly they should have all seen coming that would have helped them predict this outcome?
The last-minute travel changes by Clinton were one. She suddenly added stops to her schedule like Michigan that weren't on there before. They were obviously seeing something in their internal polling that they weren't sharing with the rest of the world. But I think with hindsight, Hillary Clinton was just the wrong candidate for this election. The country was in the mood for change, as they typically are after a two-term presidency, and Democrats literally put up the most insider candidate they could have picked.
I would just say that, 8 years ago, you had, in the aftermath of the Iraq War, on the cusp of in the aftermath of the economic collapse, you had a change candidate in Barack Obama win with and then also win with Democratic-controlled Senate and House. 8 years later, you have the opposite. I would also say that I think all of us missed the frustration outside of cities about the impish pace of the economic recovery. And that, I think, is what propelled Donald Trump to become the president-elect.
I would suggest there's also the possibility that a lot of men were polled and said they would vote for Hillary Clinton when really, a lot of white working class men.
It's not just men, yeah.
Their wife was right there, and they said, yeah, I'm going to vote for Hillary Clinton. And then they walked in the booth and didn't.
And their wives also voted for Donald Trump as well.
I think that maybe, because the interesting thing to me is that the polling was so far off, right? Yeah. All of the polls that I read suggested it was going to be a drubbing, and it didn't go down that way.
I wouldn't overlook the role racism, anti-Semitism, misogyny played in this election either. There was a strain of that in this electorate. It wasn't determinative, I don't think. It didn't secure Trump a win, but there was some of that going on in the election.
All right, Alex Wayne of Bloomberg News, Kevin Cirilli of Bloomberg Politics, thank you both for coming with us, coming on and helping to explain what's going on.
And hopefully you guys get a little bit of sleep.
Yes.
I got Red Bull.
I'll sleep when I'm dead.
Coming up, what will trade policies look like under a Trump presidency? We're going to ask Carlos Gutierrez, former Secretary of Commerce for the United States of America. This is Bloomberg. What'd you miss? President-elect Donald Trump has called for dramatic changes in U.S. trade policy. He also suggested pulling out of the World Trade Organization. But what is the reality of U.S. trade deals once he's in the Oval Office? Former Commerce Secretary Carlos Gutierrez under President George W. Bush, and now the chairman of Albright Stonebridge Group, joins us from Washington, D.C. Secretary, thank you for coming on the program. Let me ask first your thoughts on Donald Trump. He's claimed that he's for fair trade, but he's against trade deals like NAFTA and the TPP. Does that ring true to you?
Well, it doesn't. I can't connect those dots because TPP is absolutely strategically important for the U.S. Without TPP, our companies run the risk of being locked out of Asia. NAFTA is so integrated, and we have created so much value across the three countries with NAFTA. It's about $1.5 trillion. You can't just unwind that. There are supply chains that have been integrated. There are manufacturing systems that have been integrated. You can't just say throw it out. So this whole area creates a tremendous amount of uncertainty. There are projects that are being held up around the world. And at the end of the day, trade deals have been good for our country. There may be some communities that have suffered because of it. We need to take care of those communities. For the country at large, trade has been a great thing. And I just hope that the administration reconsiders their position.
I want to dive down further into the complexity of international supply chains. I think maybe when people think of trade, they think of very sort of simplistic frameworks where there's an air conditioning company and then it moves to Mexico and maybe we sell Mexico some food thing and then Mexico sells us back something. But these companies have products and design and parts that are manufactured across all different countries. Tell us more about the complexity of this international trade and why these agreements are so crucial for the operation of the companies that we interact with all the time.
Well, in many cases, companies get materials from different countries. A lot of the assembly is done in Mexico. People think that we send a plant to Mexico and we make 100% of a car. The value is created primarily in the U.S. The assembly is done in Mexico. That enables a U.S. consumer to buy the car for $200, $300 less, which means that they have $300 more to spend. We have manufacturing facilities in Mexico that can make custom cars in 2 days. There are things like that that have been created over 25 years. Computer systems that are totally integrated, where you have a sales forecast from Mexico done in the U.S., and that drives materials, it drives purchasing, it drives sales forecasting. You just can't take that apart. So I think there's a superficiality about the way we think about trade that is all wrong, and it could be very devastating. Just to give you an idea, our trade agreements are with about 10% of the world's GDP outside of the U.S. We do 40% of our exports with those countries representing 10% of GDP. That just shows how much benefit we get. And exports are what create jobs, not necessarily cutting off imports.
Secretary Gutierrez, I want to get your thoughts on the big picture here. I was reading something written by Benjamin Wallace Wells of The New Yorker post-election, and he said that so many Americans who are struggling with money pick Trump must mean that our version of capitalism could use further adjustments. That so many Americans in places where the economy is on the rise also chose Trump raises the possibility that our leaders promise too much, that we expect that more is possible than really is. You are at the intersection of politics and commerce. Are our leaders in business and politics promising too much and not focusing enough on doing good?
That's a great question, because if you think about what Donald Trump promised, he's going to build a wall immediately. That's not going to be easy. He's going to bring jobs back to the U.S. That's almost an unfair promise. How do you do that? Are you going to bring back textile jobs that were sent to Vietnam or Bangladesh? Are we going to bring back jobs of a product whereby we're not competitive anymore? We need to be thinking about creating new jobs. How do we get investors to come in instead of scaring them away? new businesses, new innovations, but new technologies as opposed to thinking about the past. This is too much about going back. And look, walking away from trade, even just delaying trade, is going to put us at a terrible disadvantage.
Trump's success last night in the upper Midwestern states, which have gone Democratic for the last several elections, does suggest that obviously, or at least in part, that the trade message resonated, at least with some voters. Is there any way that we can, is there stuff that we could do to further ameliorate the sort of distributional effects of trade? What more could we be doing to sort of help compensate the people who have lost out in some of these agreements?
Yeah, that's a good question. And there is a program called Trade Adjustment Assistance, which essentially is designed to help communities that have been impacted by trade. And that's a program that can be expanded. It's a program that the new administration should look at. The problem is, throwing the baby out with the bathwater. And that's the part that is concerning. A lot of talk was directed at China and how China is ripping us off and how we shouldn't have a trade deal with China. Well, the reality is we don't have a trade deal with China. In fact, perhaps we should, because if we should, then the ground rules would be a lot clearer.
But
there's a lot of misinformation.
But Mr. Secretary, I think to Joe's point, there was a lot of anger in this election that really drove it. This was a rebellion, in a sense, against the system. And your former boss, George Bush, and Hillary Clinton, Secretary Clinton, two huge parts of that system. Is there any way to quell that anger and to heal America without completely shaking up the establishment?
Well, or without completely throwing the economy into a nosedive. Exactly. If you create a trade war because trade has taken away our jobs and that's the way we're going to bring them back, if we put a halt on immigration, those two things right there will be devastating for our economy. So the idea is, how do we grow? Donald Trump promised 3.5% to 4% growth. You're not going to do that by slapping tariffs on imports.
But how do we do it? How do we do it, Mr. Secretary, without continuing to follow a status quo prescription? How do we do it in a new way that makes everyone happy?
One of the things that he's talked about is lowering taxes. Right now, we have the highest corporate tax rates in the world. But if you combine lower tax rates with lower exports, then you have one heck of a deficit problem. So we need a plan that fits together, that at the end of the day leads to something. Right now we have a lot of disconnected pieces that don't lead to an overall plan.
I want to get your final thoughts here on immigration. On what specific aspects of immigration policy do you think establishment Republicans and Donald Trump can see eye to eye on?
Well, the key with immigration is the following. No matter what we do and how high the wall is and how big and beautiful it is, the only way we're going to fix the problem of illegal immigration is by making our legal system work and by not forcing our employers, the private sector, to have to go to the black market for labor. And what we've done by having insufficient laws is created a black market for labor. So we spend all of our time talking about the 11 million undocumented and the wall. But we don't spend any time talking about what is the new immigration system that's going to serve our economy. And that's where I think the flaw is. We're solving the wrong problem.
All right, Mr. Secretary, thanks so much for your time. Really appreciate it. Carlos Gutierrez there, former U.S. Secretary of Commerce. He is now the chairman of Albright Stonebridge Group.
Pleasure.
All right, right now we've got Mexican President Enrique Peña Nieto speaking. These are his first comments on the U.S. presidential election since we've learned the results. He's obviously speaking in Spanish, but we will bring you the headlines there as he goes further into his comments. Again, live from Mexico City, the President of Mexico. This is Bloomberg.
Por su paciencia, pero
I'm Scarlet. What'd you miss? Mexico's richest dropped $5.9 billion on the surprise victory by Donald Trump. We've got a chart here based on Bloomberg billionaires data. And if you were to look it up, you could go to NI Rich Go on the Bloomberg. And what you'll see is that Mexico's 10 richest people lost a combined $5.9 billion in early trading on Wednesday. And this is, of course, because the Mexican peso devalued. It dropped as much as 12% following the announcement that Donald Trump has secured the victory as president of the United States. Carlos Slim, who is Mexico's richest person, of course, led the losses. On paper, he lost at least $4.9 billion. He's the fifth richest in the world, by the way.
Yeah, it's still just remarkable that, the world's richest billionaires made tons of money earlier in the week when it looked like Clinton was going to win. And then most of them did fine today on the opposite result, obviously with the exception of the Mexican billionaires. Mexican assets got clobbered, and so the richest people obviously did quite badly today.
Well,
right.
Slim is still doing okay, because as of yesterday's close, he's still worth about $55 billion if you round it up. All right, the market close is next. Take a look at the major averages with less than 4 minutes to go before the close. You're looking at gains of better than 1% for the Dow, S&P, and NASDAQ. This is Bloomberg. Moments away from the closing bell. What'd you miss? U.S. stocks and the dollar rose as heavily hedged markets bounced back from the worst selling in 4 months in the hours following Donald Trump's election as the 45th president of the United States. I'm Scarlet Fu.
I'm Joe Weisenthal.
And I'm Matt Miller. We want to welcome our viewers who tune in live on Twitter. You can watch our closing bell coverage on Twitter every day, every weekday, that is, from 4 to 5 p.m. unless something extra special happens on a weekend.
And maybe also.
And maybe then, too.
All right. Well, we begin with our market minutes. The day after Election Day, U.S. stocks rally more than 1%. The Dow at one point flirted with an record high, briefly eclipsing its all-time closing high, but didn't quite get there. Still up better than 200 points.
Stunning reversal from what we saw last night in the immediate wake of the result. At one point today, Dow futures were 6.5% higher than they were at midnight last night.
Unbelievable.
Incredible swing. We'll talk more about these huge swings, historically wide days that we haven't seen in a long time. Total reversal. We're going to get to yields. Incredible day for the market, reversing what we saw yesterday.
I'm trying to remember first. What was the day, James Comey? What was that
October
surprise?
28th.
October 28th. So I have a 10-day chart of just Smith & Wesson Holding Company that I pulled up because you were talking about it. Got clobbered today, lost almost 10%. By the way, they're going to change their name to American Outdoors Company, which I get. There's reasons for it, but come on, Smith & Wesson. Anyway, they get crushed today because now that Trump's in the office, everybody knows they can keep buying guns and they don't have to buy them today.
They can't fearmonger about everyone.
There's no rush. There's no rush to Cabela's. I also have a look at GRR is a great way to look at group ranked returns, and you can look at the S&P in different granular ways. This is the level 3 GICS on the S&P. You can see at the top of the gainers, construction and materials, construction and engineering, metals and mining. So a lot of bets on infrastructure spending, on investment there. That's really a big gain for today. And then I wanted to look at SVS, which is a great way to look at average volume on at any certain time. Of course, at the close, it's very easy. The blue line is what we actually see. The green line here is the average, and you can see that we are trading about double the amount of shares, projected to close over 4 billion shares today, and we were looking at an average of just about 2 billion.
Extraordinary day in the markets. Also, a really amazing day in the world of government bonds. Talk about whipsaw. Let's look at an intraday chart of the 10-year. 10-year yield over 2% today. Last night, it was closer to 1.71, one of the biggest moves ever. First, people bought treasuries on the risk-off scenario as people got really nervous. They bought treasuries. Then, as it eased a bit, people sold treasuries. You know, we had the general market lift. And then people remembered, as Matt was just saying, that perhaps Trump is going to be the fiscal stimulus president. Lots of spending, lots of debt. And then we saw 10-year yields up 2%. I want to put this in context. Let's blow this chart out a little longer. Look at a one-year version of this same 10-year chart. We're back to levels we haven't seen since January on the 10-year yield. I mean, yields have been rising for a little while. Also, but really surging. Now, I want to look at the one-year chart of the 2-10 spread. So what we're seeing is steepening. Look at that really sharp steepening. People see more inflation in the long term, maybe a Fed and a little less inclined to raise rates aggressively now. So short-term rates not moving nearly as much. That is a really violent steepening at the end of the chart. Also want to look at the international ramifications of Trump. Of this victory, we saw yields higher in most emerging markets. Obviously, 10-year yields much higher in Mexico, higher in South Africa. While we did see this big risk-on comeback in the U.S., it didn't really translate so much overseas. Interestingly, Brazil ultimately did end lower. And before we wrap it up on the government bonds, I want to go into the Bloomberg and look at the Treasuries whipsawing, because this is a chart of sort of the intraday move of 10-year Treasury yields. And this is the biggest. This is a 5-year chart. This was the biggest intraday swing from that initial dive in yields to the surge. We had a similar move in Brexit, but this was even bigger. So just an extraordinary day on the rates front. We're going to be talking about it more later in the show, but unbelievable action.
Related to that, I just want to take a look at what the markets think a Trump presidency means for inflation. ILBE is the World Inflation Break-Even Rate Screen. You come in here and take a look at the U.S. break-evens. We'll look at the 10-year here and just look at a graph of how they've traded. It's pretty incredible. Just fascinating to me that investors think Donald Trump is going to come along and deliver what Janet Yellen and Ben Bernanke and Mario Draghi and Enrique Kuroda just cannot do, and that is inflation.
And he did it in all of what, overnight, right?
Yeah.
He got the yield curve to steepen. All right, let's move on to commodities, Joe.
Let's look at a few quick commodities. I want to look at gold futures actually rising today. They had surged last night. They were closer to $13.50 at one point during the peak of the madness, basically ending flat on the day. Crude oil ending higher, though you got to wonder how long that'll last if we have a much more pro-drilling administration than we have now. And soft commodities, a bit of a breather. I don't really know what the connection is between corn and Trump, but corn down nearly 4%.
Yeah, that is a big mover. All right, well, in currencies, the U.S. dollar surging the most since the day after the Brexit vote. It was modestly weaker heading into yesterday's close. It was volatile during the vote count, as you can see there, but there was a quick snapback on the heels of a reversal in treasuries. No turnaround, though, for the Mexican peso. If you look at that, it tumbled to a record low versus the dollar. It fell as much as 12% before paring some of its losses. We know that the nation's top economic officials held a 7-minute joint news conference. They said the country's finances are solid. Trading has been orderly. They did not take any steps to support the currency. The central bank will be meeting next week as planned. So we will look to that for more headlines. And a final check here on the offshore Chinese yuan. Remember, Donald Trump, as candidate, has promised to declare China a currency manipulator. This is the offshore trade. He's accused Beijing of keeping the yuan artificially weak in order to boost exports. And
I think people are going to want to keep an eye out on the renminbi in the coming days.
And that would be, of course, at the expense of U.S. manufacturing jobs. And just to go back to the Mexican peso for a moment, for anyone who wants to spice up their election currency trades, here's an atypical. Oh, actually, you know what? Let me pull this up. Hold on.
While you're doing that, when you said peso, I pulled up GMM to see the severity of the move in that, and I also wanted to see Joe's corn mover. What's interesting with the GMM screen, and if you take a look at my Bloomberg, you can see a slider at the top of the screen that allows you to differentiate the moves by severity. I'm moving it all the way over to things that moved 3 standard deviations away from their 30-day average.
That is a pretty incredible chart.
Wow. Just some big moves in today's market.
Massive moves. All right, I've got my chart here, and it's for those of you who want to play along. It's an atypical currency pair that's at the opposite end of our president-elect's foreign policy agenda. So it's the Russian ruble versus the Mexican peso. So anyone who bet on the ruble gaining versus the peso is reaping the rewards, as you can see here by this big move up. The ruble returning 8.7% against the Mexican peso today. That's more than any other emerging market currency pair. It's not a typical currency pair, but why not, right? All right, those are today's market minutes.
All right, for more on today's action, we're joined by Elsa Linos, senior currency strategist at RBC. Elsa, thank you very much. Extraordinary 12 or 24 hours in the currency markets, all markets. Huge gains for the dollar, very un-Brexit-like there, in which we saw the pound weaken considerably. What is the outlook for the dollar going forward, particularly if we get more fiscal stimulus?
So I'm actually very positive on the dollar, but it's not so much on fiscal stimulus, it's for the potential for tax reform. And I think one of the big news of the night was the fact that the Republicans not only kept the House as they were widely expected to, but that they kept the Senate as well. We have a Republican president. For the first time, tax reform is really on the agenda.
What kind of tax reform? I mean, lower corporate taxes, an allowance, almost an amnesty of sorts for companies to bring back tax from overseas. Is that the kind of thing that's on the table?
So we've heard a lot from Speaker Ryan about the potential for overseas corporate tax reform, and that could have potentially huge implications for the US dollar. Trump himself has talked about a deemed repatriation tax. Now, either way, the best analogy is the Homeland Investment Act of 2005. Last time something like this was done, it led to huge inflows into the US dollar and a real turnaround in the dollar's fortunes, a strengthening of the dollar for around 12 to 18 months.
I was showing earlier the offshore Chinese yuan because we do know that Donald Trump has been very vocal on China being a currency manipulator. Does that happen? And if it does, how does that trickle down into trading of the currency and how it affects other pairs?
Well, the irony is that China is a currency manipulator. It's just not a currency manipulator in the way that some might think. You know, China's not really allowing its currency to freely float. It's actually intervening to prevent it from weakening even further. So I think policymakers sometimes have to be careful what they wish for, because if China were to step back from the market right now, you could actually see dollar China quite a lot stronger rather than weaker.
Well, and of course, others do that. I mean, the Bank of Japan has also manipulated its currency quite often.
You know, when it comes to currencies, we tend to see less manipulation in the G10 space. The Japanese authorities, obviously, overnight were quite concerned about the level of yen strength, but since then we've seen quite a big turnaround in dollar-yen. So I think they'll be pretty comfortable at the moment. There's not anything they need to do.
No need to come in and intervene.
Exactly. And, you know, actually, if you look at the turnaround we've seen in markets, the biggest reaction has been a switch from the risk-off that we saw during the night last night to much more dollar strength and more risk-on today. So I think, you know, as we look forward, we're really thinking about the medium-term impact of tax reform, potential fiscal stimulus, potentially Fed hike. All those things, I think, will come together to a quite positive dollar story.
There is obviously this global story about political chaos or surprises or whatever, starting with Brexit, U.S., obviously nothing is very settled in the Eurozone. Where are the safe haven currencies? Where are the safe haven places to park your money where one can feel confident that there isn't political upheaval in the offing?
Beyond the yen, right?
Right. Or is it just the yen and the Swiss franc, as always?
So the yen and the Swiss franc are the two classic safe havens. In the Swiss franc's case, it's not quite so clear-cut. One of the things to bear in mind is when the U.S. did introduce the HIA Act back in 2005, the Swiss franc was actually one of the biggest losers because of a lot of overseas earnings held in Swiss francs.
What is that?
So the Homeland Investment Act 2005, it was a temporary tax break on overseas corporate earnings. And, you know, that's the potential for quite a lot of strengthening in dollar Swiss. So if you look at the whole world of FX, the yen is still the safe haven.
What about Australia and New Zealand? I'm always curious about when I read those articles of people going to the end of the world to place their to buy real estate.
Julian Robertson,
way out there. Could we see more flows into those? Stable countries, very solid rule of law, not really geopolitically in the center of anything. Could we see more flows into those currencies?
So the underlying assets do tend to act as forms of safe havens. You know, it's a place for people to park their money. But the currencies themselves don't trade anything like safe havens. Very small, very illiquid, very difficult to trade. But actually, I think you should be looking for a little bit more strength in the Australian dollar and the New Zealand dollar if we see markets calm down.
But for other reasons.
For other reasons.
So we have a situation here where monetary policy is going to be tightening, and it looks like there's going to be fiscal loosening. Does that have typically have an effect on the dollar like the one we're seeing today?
Absolutely, and even more so, you'd expect to see the dollar go up because of the potential for the capital flows. You know, capital flows are actually a lot more meaningful than the offset of fiscal policy and monetary policy, and so that's what you have to be focused on the most in the coming months. You know, as we begin to see what form the cabinet is going to take, what policies Trump is going to introduce, that's where you should be focused on to get the next sense for the dollar.
All right, Elsa Linos, senior currency strategist at RBC, thank you very much.
All right, we have some breaking news from Mylan. This is the generic drug maker. It reported third quarter adjusted earnings per share of $1.38. That is weaker than what analysts had been looking for, which was $1.45. So a miss there on the bottom line. However, the company reaffirmed its full year forecast and its 2018 earnings per share estimate. So again, the revenue number and the EPS number for the third quarter missing, but Mylan reaffirming its full year forecast.
Coming up, the Republican Party takes stock following Donald Trump's surprise victory. We'll speak with former New Jersey Governor Christie Todd Whitman, a Republican who voted for Hillary Clinton. This is Bloomberg.
What'd you miss? The future of the Republican Party, one of the central questions looming over the election. During the campaign, we saw a number of lifelong Republicans throw their support behind Hillary Clinton. And you can count our next guest among them. Joining us now is former New Jersey Governor Christine Todd Whitman. She joins us from Scottsdale, Arizona. Christine, you endorsed John Kasich during the primaries. You did vote for Hillary Rodham Clinton. I want to get your reaction, first of all, to the outcome of the election. First as a woman, second as a Republican.
Well, I mean, obviously I was disappointed he was not my candidate, but I was where I was surprised was the magnitude of the sweep. I never discounted his ability to win at all. And actually, I told a lot of people, don't be so sure, because the passion was behind his voters. There's a whole host of angry, frustrated, scared people out there for whom government has not been working. And so that was not, the fact that he was able to win was not a total surprise. It was the magnitude of that win that really was surprising. And, you know, as a woman, I'd like to see a woman as president at some point in time, because I believe that we do bring a different way of problem solving and we do bring a different way of prioritizing. But I didn't vote for Hillary Clinton because she was a woman, and that was not my central issue. It was because I was more concerned about him and his ability to bring the government together. But I have to take him at his word in his acceptance speech last night, and I hope that's the way we proceed.
Absolutely. Now, you're the face of moderate republicanism. What do you think moderate republicanism looks like today, and what might it look like in 4 years?
Well, that's a very good question. It's really going to depend on how Donald Trump approaches the Congress and approaches those senators and congresspeople who didn't run with him, who ran against him, but whose votes he's going to need to enact some of the things that he wants to do. And if he reaches out, and if he tries to heal the wounds, and if he steers a more moderate course in the sense of driving for the change that the electorate demands, but doing it in a way that doesn't alienate people, it doesn't demonize groups who might oppose him, then I think we're in a good place. But if we've got groups like the Freedom Caucus that are going to be insisting on trying to extract a pound of flesh from those Republicans who weren't, quote-unquote, Republican enough, then I think we're going to be in a very bad place and have to do a hard rethink of what is the Republican Party, what does it stand for?
Yeah, I was just going to ask you, do you think it's possible that there is no future at all in the Republican Party for your sort of moderate brand of conservatism? And relatedly, are there people of your ideological bent who are still Republicans out of inertia but don't really have a place or a reason to stick with the party?
Well, there are, and there are a number of people who have said, okay, now I'm out of it. After these results, just because they're so concerned about the rhetoric we heard during this campaign, as I am concerned about it and was concerned about it, and that's what's going to be a key for me. But, you know, I think the Democrats are they're about an election cycle, maybe a cycle and a half behind us. If you look at the pressure that Hillary Clinton was under from Elizabeth Warren and Bernie Sanders and Bill de Blasio, they're moving to the left, and so there are going to be a host of Democrats who are left there in the center saying, I'm not comfortable here, and that may be the nucleus of a new movement.
Well, and you see it all over the world, really. It's not just a right-wing anger and a right-wing populism, because Spain has Podemos, Syriza in Greece. Is it just a time right now where a lot of radical proposals go through, and do you think that the Republican control of the Congress and Senate gives Donald Trump even more room to legislate, to move some radical legislation?
It does give him some room, but it also means that because he can't do it just on the back of the more extreme elements, he's got to bring in those moderates, so he's going to have some balance there. And it's going to be interesting to see how he handles it. He's never had to do that kind of thing before, and he's going to find out very quickly that he can't fire Congress. And he's going to find that he has members within his own party who are, and I'm not talking about those who did not support him during the campaign. I'm talking about the people who would be his natural supporters, the Freedom Caucus kind of people that have their own agenda. And they're not necessarily going to be his. They may want to push him further than he wants to go. And that's going to be an interesting struggle to watch and see how that plays out.
As Matt said, you know, this isn't just a right-wing phenomenon. Across the U.S. and Europe, both left-wing and right-wing movements are gathering strength. Is there a prescription for establishment politicians' ideologies to gain currency among the people within a way that's not that wouldn't just be pandering towards them or sort of, you know, ultimately damaging?
Well, first of all, they've got to get the message. And if they haven't gotten the message with these first two elections, and you look at the spring French elections, Le Pen is doing very well. I don't know that Angela Merkel will survive. And her elections in Germany, you have it, as you've pointed out, upheaval as you look all around the world of the populism movement. And it should tell the establishments in all those countries that, people want to see government work for them. They want to feel that their future can be better than their past and what previous generations saw. So it's time. Certainly in this country, Congress has a terrible rating as far as the public is concerned, and that's because they spent their entire time, they got too comfortable, I guess, and they're an echo chamber, and they've spent their entire time fighting politically and not really negotiating the policy issues that we need to have addressed. And they better understand that. And that should form a path for them to go forward and what it's going to take to actually start to address those issues in a positive way.
Governor, we saw risk assets, stocks, overnight tank or futures and then recover this morning. It seems the market got more optimistic. Do you have any room for optimism for this candidate for whom you did not vote? Is it possible you think that this works out well for the U.S. economy?
I certainly hope so. I mean, he's my president, going to be my president now, and there's a lot that needs to be done in tax reform for corporations and to help the American people in general, because that will bring money back and will mean the investment in jobs. He's not going to be able to do all he said he was going to do because it's not going to be within his control. And you can't stop progress, which has made us more efficient with fewer people in manufacturing, for instance. But he can make a real difference, and I'm very hopeful.
All right, Christine Todd Whitman, former governor of New Jersey, joining us from Scottsdale, Arizona. Thank you.
Thank you.
Coming up, we're going to take a look at one place where investors are running in the wake of last night's big surprise. Stay tuned. This is Bloomberg. What you miss, extraordinary 24 hours in the world of interest rates and bets on the Fed and bets on inflation. Joining me now to discuss what happened is Bloomberg's Matt Boesler. Pretty extraordinary day in the fixed income rates world. What happened? Where do we stand? What are the new expectations of investors?
Yeah, so the really interesting trend we've been seeing in markets over the last several weeks, really since the September FOMC meeting, is a rise in the break-even inflation rate component of Treasury yields. So interest rates have been going up because that sort of inflation factor priced into those yields has been going up. And along with that, we've also seen stocks kind of going sideways or down, which is not something you usually see. Usually when break-even inflation goes up, stocks go up as well. So that was sort of an odd thing. But then just in the last few days, and especially today, since the Trump victory, that correlation, that positive correlation has reasserted itself. So not only are break-even inflation rates continuing to go up, but stocks are moving up now as well.
So earlier in the show, Matt joked that overnight Trump has accomplished what Mario Draghi and Janet Yellen haven't been able to accomplish in years, which is really getting investors to think inflation is coming. The expectation is that Trump is spending fiscal stimulus. Is that the story, that maybe the trick to getting more inflation was not on the monetary policy front?
Yeah, you know, that's something that the Fed officials have been really, talking about for a long time this year. You know, like, we need more help. We can't do this all on our own. It's time for structural fiscal policies to take the baton and sort of lift the outlook. And it's fascinating because that's exactly what we're seeing in markets today after the election result last night. And it's really interesting if you look at the inflation curve and sort of pinpoint exactly what's going on. It looks like the probability of hitting inflation above 1% or maybe above 2% has been going up. But the probability of inflation above 3% has not been going up as much. So markets are really seeing, like, this sort of development that is apparently going to allow the Fed to hit its inflation target, but not necessarily cause runaway inflation.
So what are the expectations with regard to tightening? Because in the immediate aftermath of the vote last night, we saw December odds collapse. They basically recovered completely. What's the market now expecting for rate hikes going forward?
Yeah, so just as of late this afternoon, the odds of a December rate hike are actually up slightly from where they were yesterday. And not only that, but over the next year, which, includes December, but also all of 2017 as well, the outlook for tightening has been marked up quite a bit there. And then, of course, even going beyond that, further out, the outlook for tightening. So really, like, at every sort of stage of the game, we're seeing investors think the Fed has a better chance of getting interest rates higher now.
Absolutely extraordinary developments. Will be really interesting to see if Trump allows the Fed to really get off zero and continue more normal rate cycle. Bloomberg's Matt Boesler, thank you very much.
Thank you.
And coming up, financial markets' reaction to Donald Trump's surprise victory in the U.S. has so far proved less extreme than the Brexit vote in June. We'll show you some side-by-side comparisons. This is Bloomberg.
I'm Mark Crumpton. Time now for First Word News. Donald Trump is said to be about a week away from narrowing down the first members of his administration. That's according to 3 aides. Trump's first transition meeting was today. Campaign manager Kellyanne Conway says Vice President-elect Mike Pence, New Jersey Governor Chris Christie, and Alabama Senator Jeff Sessions will be the most closely involved in that process. The impending presidency of Donald Trump is already helping his book sell. Trump's breakthrough bestseller from the 1980s, The Art of the Deal, and his campaign work, Great Again, made Amazon.com's movers and shakers today. That list features books making the biggest jumps on the bestseller list. Broadcast networks attracted 40.8 million viewers with their nighttime coverage of Donald Trump's election victory. Among the 6 broadcast networks, Comcast's NBC was tops with an average of 12 million viewers in prime time. That's according to preliminary audience numbers released by Univision. Walt Disney's ABC was second with 9.7 million. 5 more Indian diplomats have returned to their country in an ongoing diplomatic dispute with Pakistan. The controversy was worsened since late October when both countries expelled an embassy staffer on allegations of spying. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. Scarlet.
All right. Thank you so much, Mark. We have breaking news. Alexion Pharmaceuticals suspended from trading right now. The ticker is ALXN. And this is as the company says it is investigating its sales practices, and it filed to delay its 10Q. It says its audit and finance committees are working to complete this investigation. It has retained outside counsel as well to insist in this investigation. So as a result, it's unable to file its 10Q during this prescribed period. We'll keep you posted on when that stock begins trading once again. In the meantime, if you look at the equity markets overall, it was a big day for equities, especially when you consider that futures had been plunging yesterday.
It's more than a good day. It's a mind-blowing day, given how far down we were last night. I mean, I'm in disbelief at the speed of this recovery, even having seen how fast we recovered after Brexit.
The Dow flirted with a record high. At one point, it was trading above its closing high.
We had Martin Sorrell on earlier, and he said, you know, this is like Brexit all over again, or a second Brexit. What I did was I went into the Bloomberg and looked at the reaction of risk assets at noon in London on the day after Brexit, and at noon here on the day after the election. You can see it's a very different reaction. S&P futures were down after Brexit. Obviously, the S&P cash trade up after the Trump election. The emerging markets index, the commodities index, treasuries, everything's going different directions with the exception of gold and the dollar, and even that is a pretty marked difference.
It's like everything's compressed this time around.
Yeah, it all happened very fast.
All right, for more on today's stock market reaction, I want to bring in Ben Laidler, HSBC global equity strategist, and ask him just why the market is reacting so positively, so optimistically. Before this, of course, every pundit said Clinton would win, and they all said also that Trump would be disastrous for the economy. So many guests came on the program and said there would be a recession if Trump was president, and yet people were buying stocks and getting out of safe haven assets. Why?
So you're asking me for my third wrong prognostication of the last 24 hours, but I'll give it a go. You know, markets are clearly hoping that, you know, we have a more benign president than we did candidates. We had, you know, a pro-growth agenda from the candidate last night in a very conciliatory speech. We've had some sort of sector relief today, you know, pharma, financials. Doesn't mean I don't think it's going to continue, but I can try and rationalize it.
Does it mean because the Republicans captured the presidency, the Senate, and the House, that whatever uncertainty there was regarding Donald Trump's policy proposals, at least now you know what those policy proposals are and the likelihood of them getting passed is that much higher?
I think that's a bit of it. I mean, you've seen this dramatic steepening of the yield curve today. I mean, the market's clearly betting on growth coming through. I just think that's far too early. I mean, our call is really that we're looking at an extended period of heightened economic policy uncertainty. I mean, on a day that you had this big move in equity markets, the economic policy uncertainty index we look at for the US was up 150%.
What's that based on?
It's based on news, essentially. I mean, and when you back test it, and this is what's worrying, lower capex, lower earnings, lower GDP growth.
Okay, you can make that argument, though, for Brexit, but we haven't seen that come through just yet. The data out of the UK has indicated that the economy is holding up better than so many of the people had feared. What if that's the case with the United States as well?
I think this is a long game, and we haven't triggered Article 50 yet. We haven't had a Brexit yet. I think you know, my concern, you know, the other concern here in the US is we've had this steepening of yield curves, this backup in break-even inflation. How does the Fed respond to that? I mean, the growth attached to that is a year out.
Right. In our last segment, we were talking about the fact that if expectations for Fed rate hikes have all come up this year, next year, and so on. In your model, how does that feed through to equities?
So I think the backdrop here is a little bit concerning. I mean, we were concerned about equities coming into this.
Yeah.
We're still concerned about equities today. And the reason for that, you're on 17 times forward earnings. You know, it's a 1.5 standard deviation event. You've got earnings expectations, which are very high, 13%. So I would argue a lot of this growth that we're talking about potentially is sort of already baked in to the numbers. And you're sitting at close to all-time high profit margins. So I think the backdrop was already pretty vulnerable, and we're baking in more on top of that.
So it's a good day to go short stocks.
I just think it's far too early. And I would certainly be looking at, you know, interesting the things that did really poorly today with the steepening yield curve and the risk-on market was the defensives. I would be looking at some of these defensive sectors. They're very under-owned. They're defensive. They're reasonably cheap.
Does it not tempt you, though, when you think about Donald Trump's constant talk about infrastructure investment and big stimulus? I mean, we're not talking about Hillary Clinton $200 billion. We're talking about like $1 trillion and selling bonds to fund it. Giving that money to Caterpillar, giving that money to Joy Global, giving that money to people who are going to build this stuff.
And not to mention rewriting Obamacare as well.
If I was looking to hedge out that risk, I would look to get exposure to real assets. I think if we are looking at a reinflationary environment, I'd be looking at materials, I'd be looking at energy, maybe even real estate here. I mean, we like quite a lot of those sectors anyway, even because they're defensive or because we're quite bullish on emerging markets. I think EM growth is coming back here.
And we did see today big rallies in copper, iron ore, and aluminum, perhaps on some of these expectations that we're going to need a lot more real assets. There was a gap today in performance between domestic equities and international ones. Emerging markets still had a pretty bad day, clearly underperformed. Would you expect that gap to close, that international, despite perhaps even Trump's antagonism towards global trade, that the international markets could outperform U.S. ones?
So, funnily enough, I actually think it's the other way around. I think the rest of the world has a problem here, and the U.S. is U.S. equities is the relative safe haven. You know, if I look at Europe, I think Europe is the big loser here. You have the most globalized corporates sit in Europe. You have some of the least policy flexibility in Europe. I mean, very low growth. Right. Rates are already, you know, extraordinarily low. You have variations of that problem, you know, in Japan. We haven't talked about trade. I think trade's a much bigger issue for Japan than it is for China or dare I say it, Mexico. I mean, you know, big trade partner, but they have very little growth. It's very low. Rates are very low.
They're pretty bleak.
So the U.S. looks better than Europe, than Japan, but within the U.S., overall valuations are pretty rich, and you want to stick with the defensives.
For now, yes. And I should say emerging markets. I think, you know, in a day when everything has performed the opposite of how you would have expected it to, emerging markets has done as badly as you would have expected it to do. I think there's an opportunity in there. People are concerned about protectionism, trade policy, et cetera, et cetera.
Mexico an emerging market or other emerging markets?
EM's a very big place. I would probably avoid Mexico. Brazil, Russia, South Africa, the more cyclical, commodity-focused bits of EM. Earnings are turning. They're very cheap. They're very under-owned.
All right. Hey, Ben, thanks so much for joining us. Appreciate it. Ben Laidler, Global Equity Strategist at HSBC.
Coming up, Trump's surprise victory shocks markets in the nation. We'll dig into how he paved his way to the White House next. This is Bloomberg.
I'm Matt Miller. Time for the Bloomberg Business Flash. Look at some of the biggest business stories in the news right now. The British day trader accused of helping cause the 2010 flash crash is set to plead guilty in federal court in Chicago. That's according to his lawyer. Navinder Saro lost a year-long battle to avoid extradition from the UK. He's accused of making $40 million on spoofing CME Group's stock market futures market over 5 years, including on May 6 of 2010. That's when a trader frenzy briefly wiped out almost $1 trillion of value from American equities. Mexico's wealthiest person lost $5.1 billion after Donald Trump's stunning upset over Hillary Clinton in the U.S. presidential race. Carlos Slim shed more than 9% of his fortune after the peso dove as much as 12%. Slim led declines of $41 billion on the Bloomberg Billionaires Index at the start of the U.S. Trading day. The 10 Mexican billionaires on the index dropped a combined $6.5 billion in early trading. And finally, Jack Rifkin, CEO of money manager Altegris, has died after a battle with cancer. In a statement, the company says he'll be replaced, but he has been remembered by almost 50 years of investment research experience. In 2013, he joined Altegris. He was previously the chief investment officer there, but he held a number of other roles, including leading global research at Smith Barney, and then at Lehman Brothers, and then at Neuberger Berman, where he was chief investment officer. Jack Rifkin was 76 years old. And that's the Bloomberg Business Flash.
What'd you miss? In the hours after Donald Trump's election as U.S. president, pundits and markets alike were surprised. So how did everyone get it so wrong, and what can we expect in the months ahead? Joining us now is Bloomberg Politics' Sahil Kapoor, who recently wrote about how Trump's populist uprising brought him all the way to the White House. Sahil, perhaps the most surprising aspect of the map was just how well he did in the upper Midwestern states, Michigan, Wisconsin, Pennsylvania. I don't know if that's considered Midwestern, but these sort of Rust Belt type of states. There were hints of that at the very late, that he might do well late in the campaign, because we saw all these campaign stops from Clinton and Obama that can't have been how they wanted to allocate their last weekend. What happened in those states?
Joe, it's easily, this election last night, easily the most staggering political upset in American history. And you pointed out exactly what the story is. It is the Rust Belt states, the Great Lakes states, and the upper Midwest. Trump won Michigan, a state that President Obama won by 10 points in 2012. He also won Wisconsin, which Obama won by 7 points, and Pennsylvania, which Republicans have been trying to win for many election cycles and have been failing to. All of these states were termed part of the blue wall. States that have not voted for Republicans since the 1980s. And Trump not only put some cracks in that wall, he absolutely shattered it. And that was the real story of this election. One of the single biggest thing the polls missed is Trump's strength among particularly non-college educated white voters in those states. Nationally, he won non-college educated white voters by 67%. Among non-college educated white men, it was 72%. He was absolutely decimating the Democrats there.
72%.
So I think that's the story.
That's pretty incredible. Beyond, though, the white working class and white uneducated men, which other groups did he make inroads into that we didn't expect? For instance, I read somewhere Latino men, educated white women.
How did he win Florida?
A lot more of them flocked to Donald Trump than we would have thought.
So the two stories of this election are, number one, Trump surprisingly outperforming Mitt Romney by just a couple of points among Hispanic voters and African-American voters. I don't think anybody saw that coming. But the big story is that these voters stayed home. These voters are the types of voters that Democrats rely on. And as we were talking about just yesterday, Hillary Clinton needed them in huge margins to come out if she was going to win. They did in 2012. They did in 2008 for Obama. They did not show up yesterday, and that was the reason she lost. As for the polls in the other states, they weren't too far off. The rest of the states, the safe Democratic states went for Democrats. The safe Republican states went for Republicans. Trump won a number of these toss-up swing states, which were critical to his path. But again, it was the upper Midwest. It was the Rust Belt where he cleaned up, and his message, railing against trade deals, his message arguing that increased immigration is responsible for their declining job prospects, it really hit a nerve. And I think everybody underestimated the extent to which that would power his, his showing in those states.
Sahil, who's the leader of the Democratic Party today?
Joe, your guess is as good as mine. The Democrats have a huge, huge moment of reckoning right now. I think so many people in the political and media class have been preoccupied for the last few years talking about the Republican Party's problems with minority voters, when we forgot about the Democratic Party's problem with the one group of voters that reliably votes in elections, and that's white voters. So, the Democrats have a huge moment of reckoning here. I don't know how they're going to come out of it. I don't know what they're going to learn from it. But this path they're on right now is unsustainable. They had thought that this coalition of minorities, millennials, and unmarried women that powered Obama twice would be sustainable, would regularly turn out in presidential elections. And it turns out that group is not reliable to turn out unless President Obama's name is on the ballot. And that's a huge problem for the Democratic Party.
I keep reading, though, at the same time that the white working class, especially white uneducated men voting for Trump, that group is going to be more and more of a minority in 2020, that demographically and in terms of time, that will be less powerful a voting bloc next time around. So the Democrats, by virtue of the fact that they represent minorities and liberal college-educated women, will be in a better position. Is that not the case?
That's certainly true, Scarlet, but they have to turn out to vote. So the Hispanic vote, for instance, grew, or the Hispanic population as a share of the country grew by several percentage points from 2012 to 2016, but they only grew by 1 point as, in terms of their turnout rate. Which is far below, their overall growth rate, and white voters are turning out at a pretty high rate, already much higher than Hispanics, and I think higher this election for Donald Trump. So that's what they're contending with. The Democrats certainly have potential if these groups of voters continue to support them in big margins. But again, it comes down to turnout. It's the biggest cliche in politics, but that's what happened yesterday. That's why Donald Trump is going to be our next president.
It was interesting to hear Hillary Clinton's speech today. I thought very gracious, and President Obama also talking in a way that kind of aims to bring the country back together to heal this sort of us after this divisive election. A lot of people on Twitter talking about the possibility of a pardon for Hillary Clinton by Barack Obama at the end of his term. A lot of people don't know that you don't have to be charged with anything. Of course, she hasn't been, and she's not under indictment. But do you expect that to happen, a kind of Gerald Ford, Richard Nixon kind of pardon?
So I think the White House spokesman was asked about this today, and the White House didn't give a yes or no answer. I don't think they have any plans on this front. But Josh Earnest did express hope, I believe, that the next president will look forward, not look backwards, and not sort of seek political revenge, that sort of thing. So I don't know that the White House is...
Well, what if the next president talked about seeking political revenge in every one of the debates?
Or more importantly, the rest of his party.
Right. Yeah. Let's just say if it's on their mind, they're not talking about it publicly. I mean, this is probably the furthest thing from President Obama's mind right now, as you could imagine.
Sahil, you mentioned that the Democrats now face this reckoning, but a few things. Like, Hillary Clinton won the popular vote last night, and I also remember people saying that Democrats faced a reckoning after 2004, and they say that the Democrats' social liberalism had no currency in Middle America. And I remember them saying the Republican Party faced this huge reckoning after 2012, and that party had no currency outside of white Americans, which didn't seem to matter this election. Are we too quick to declare the death and the permanent wilderness of these parties?
Well, we shouldn't be writing any party's a permanent obituary, and we shouldn't be suggesting that any one of them is going to go the way of the Whigs. I think that was wrong if people suggested that of Republicans. I think that is wrong if anyone suggests that of Democrats. But the truth is, Joe, people did, the parties did adapt in these moments. I think after the 2004 election, the Democrats did adapt by appealing to this new section of the electorate, which apparently came with its own downsides. Republicans in the Obama years have mastered the strategy of opposition and obstruction and used it to mobilize their base, and that's why they won big victories in 2010 and 2014. So I think political parties are extremely resilient in a two-party system to adapt, but the process of getting there is very painful, and it's not really clear what things are going to look like when they come out the other end, and that is the process that Democrats are about to go through right now.
All right, Sahil Kapoor, Bloomberg Politics, thank you very much.
Coming up next, billionaire investor Carl Icahn reveals he left the Trump victory party last night to bet $1 billion on U.S. stocks. More of his comments coming up. This is Bloomberg. I'm Scarlet Fu. What'd you miss? Billionaire investor Donald Trump and Donald Trump supporter Carl Icahn says that the Republican nominee's victory last night is a step in the right direction, but don't expect changes overnight. Earlier today, Bloomberg's Eric Schatzker asked Icahn if he will take hedges off now, given this Trump victory.
I took some of them off last night. However, I am not telling you that overnight this market's just going to run away on the upside. I still think that there is no question. You don't just wipe out the problems because Donald's coming in January. I mean, there's still, I think, a number of problems in our economy. And I think the zero-rate interest rates are a problem. So, look, I'm not telling you overnight this is a complete change, but I think it's a major step in the right direction.
When you saw last night, I think it's an amazing story, by the way, and so perfect for Carl Icahn. You're at the Trump, you're waiting to celebrate the Trump victory with Donald and his family and all his other backers like yourself, and you can't resist the opportunity to trade when you see the S&P 500 futures tanking. How far down did they have to drop before you?
I'm making a point of that, meaning that I thought it was absurd that the market, the S&P was down 100 points on Trump getting elected, where I think, by and large, there might be some problems with getting elected, but it certainly, to me, is positive. Now, how positive? Am I telling you next week it's going up? No. I mean, I'm not going to say that. We're not out of the woods in this economy yet. I think there's some overriding problems. But I think what you have to do is change perception, and if you do, I think we got great opportunity in this country. This is a great country. We have a great country. We got a very willing workforce, and we have, great ability to manufacture, and yet we just sit back and don't do anything and build regulations on regulation and regulation, and wonder why. What's wrong? Why we don't have? Okay, one of the major problems, the economists that know more than me about this kind of thing will tell you that one of the major questions and problems is that productivity is not growing. And when productivities don't grow, you can't compete. And why isn't it growing? Because business is afraid to spend money. I mean, it's simple. I get into these businesses. I own them. And a guy like me likes to take shots, and I'm afraid to put money in. Today, I'm not afraid as much anymore.
Well, your portfolio is measured in the billions, Carl. When you put on the trade that you described last night, how much money were you putting to work?
Well, I tried to put a lot more to work, but I couldn't put more than about $1 billion to work. And then the market got away. But I'm still happy about it. I'm still real happy about it.
You bought $1 billion of what?
Well, the S&P was so liquid. It was unbelievably liquid. The world was going nuts. Last night, I mean, it's amazing. The world was going into a panic for no reason. And that's my point. That I think Donald coming in is a good thing for the economy, not a bad thing.
Don't miss this. President-elect Donald Trump meeting with Barack Obama at the White House tomorrow. Should be a fascinating moment.
We'll have some beers. Also, don't miss this. Disney earnings out after the bell.
And you will miss this. Our very own Matt Miller heads to Berlin. Matt, we're going to miss you.
I will miss you as well, but I'll continue to watch What You Miss every day at 3:30 p.m.
And maybe you do some video segments and stuff.
I'll stream it on Twitter. I'll stream it all on Twitter.
That's all for What You Missed. Thanks for watching.
We'll see you back here tomorrow.
Have a great evening. This is Bloomberg.
I'm Mark Halpern. And I'm John Heilman. And with all due respect to those who think this can be reversed, maybe, but only in post-production. Man, stuff just happens here in America. Well, about last night, after more than a year of brain-twisting, reality-bending, you can't make it up plot twists, the 2016 presidential race ended last night with one final tectonic plate shifting 9.5 on the Richter scale.